If you think the number of trades you take will determine the profit you will make in the business of trading, then you are not gaining mastery and you are not becoming mature in the business of trading. Welcome to this week's edition of NTFX with analysis. We're going to be giving our forecast and we hope we make some money in the ones we did last week. We'll start with DXY. And last week, I told you that DXY will push to the upside after breaking this low. I think you see it. We make mention of this. We made mention of this 3-wave up. We made mention of this to break this low. And after that, from this level, after we have taken this low, we have to make a move to the upside. What we are doing in in this forecast, what we are doing is to ensure that we match our structure with the available liquidity in the market. Okay, that's why we are getting a lot of confidence in making our forecast. You see, liquidity here, structure is complete by having A, all right, B, and what? C. So having this A, B, C complete structure, we have taken liquidity for C to complete. So from there, you should have a move to the upside. That's why you have this. So you won't be wrong to go to 15 minutes time frame and begin to look for buy opportunity from this level to the upside. Okay, you go to 15 minutes of DXY, go to 15 minutes, you see what I'm talking about from this level now. You begin to see, all you want to see is looking for impulse and correction. Okay, because 4-hour structure must complete first before you go to 15 minutes. But you see here, there's no special liquidity that is grabbed. So it will have been difficult for you to find an entry here. Why? If you say, oh, this is an impulse, this is correction, and you want to therefore buy from here, from this level to the upside. Okay, you want to buy from this level to the upside. What is the danger in doing this? It's possible that after you have this to the upside, then this market will fall. What has just happened now? You have had a wave A, a wave B, a wave C, and then this market will fall. So why must it be like that? Because there was no liquidity grab here that will give you confidence that this upside will happen. That is a new dimension I've brought to wave analysis that will make you not to take trade anyhow. Okay, from here, you see that you have corrective structure, but this corrective structure did not go deep for you to be able to take it. If you take it buy here, where are you going to put your stop loss? It must be here. Can you see the gap from this level to this level? It's too far. Do you understand? So you have this, you have A, B, and C. All right. If you take a buy here, where will you put your stop loss? Right here. This is the impulse. Can you see? So you see that if you are to buy DXY here, then you can even wait. You see the liquidity graph right here. Sorry, I want to go slightly detail. Today, you see the liquidity graph right here. See the impulse, 3-wave corrective structure. This is your trade to the upside. This is your stop loss. So any setup you are taking, any trade you are taking, you must find where the stop loss is. Okay, you must be able to recognize where the stop loss is and be comfortable with it. All right, this is an impulse after this breakout structure. Can you see A, B, and C? So if you are taking a buy right here, your stop loss will be right here, which is okay. Can you see? But by the time you are taking a trade and the stop loss size is too big, it's far from the entry, just know that the setup has a low probability. So what should you expect this week? All you expect this week is to have a corrective structure here, one more push to the upside. Okay, before anything will happen, let's target here. There must be corrective structure on euro dollar and one more push to the upside. This one more push to the upside is a trade opportunity for you. And after that, we have seen this, we have seen this, we have seen this. So this is pushing to the upside. We will know from this corrective structure, one more push to the upside. From here, whatever reaction we get will determine whether dollar is coming down or to correct and keep pushing to the upside. Okay, that's for dollar DXY. For euro dollar, guys, it will play in the opposite direction with the US dollar index. So what we did last week was to look at this three-wave structure to the upside, followed by another three-wave structure to the downside. Okay, so we wanted to see another three-wave structure to the upside to complete the structure. So I saw this as a structure that is too small to complete this A, B, and C. Let me show you. All right, you see something now. These three waves up, let's call it W. This three wave down, look at it. Three wave A, B, and C. Can you see? I want to show you clearly. This is C in the middle, W, X, and this is Y. I have to make it cleaner. A, B, and C. A, B, and C. You can see the wave inside the corrective structure, and then A, B, and C. This C here, this is A here, this is B here. I consider this C as too small for this A and B. That was why within the week, I was expecting that after having this, we should have this push up to the upside to break this top. So that instead of having C here, we'll have it here. This would have been a more balanced structure for me, for us to look for a sell opportunity to the downside for euro dollar. But unfortunately, it did not bother. It did not bother to complete the structure. It was telling us that this A, B, and C was enough to complete this structure, in as much that this top has been taken. This top has been taken. We could have a move to the downside. So from this level, you just go to like 15 minutes time frame and begin to look for structure, break of structure, corrective structure, take your trade. All right. At the last part of last week, I went to do a presentation in my university. So I couldn't even monitor what was happening on euro dollar until after Friday evening. Okay, so right here, what you just need to do, see break of structure, A, B, and C. This is another trade to the downside. Break of structure, another A, another A, B, and C. That's another trade to the downside. Okay, each time you have the break of structure, you have to now follow it with the corrective structure A, B, and C. From here, another trade to the downside. All right, and then you have it just like that, like that, like that. So what else do we expect on euro dollar this week? What we should expect is simple. Right here, you already have a break of structure. You need a corrective structure this way, and then from this level, look for entry to the downside to proceed to break this loop. You will need this week, guys. You're going to need this week. But I'm still going to be thinking that we might have this as three waves up, 1, 2, and 3. So we might have this, and then maybe a sluggish move here, come this one, break this low, come here and still break this top. I don't expect that if we have a very strong bearish move, this will be enough liquidity to do that. And after that, it was going down sluggishly. I don't expect that. So we might have a sluggish move at the middle, and then you have this break to the upside before we now begin to sell. So please pay attention to the structure so that in the final analysis, all these moves to the upside will just be wave A. This one will be wave B that have broken the level of wave A here. And if that has happened, this C should break this level here before what? Expanding flat. Then from there, you have a move to the downside. Just like something like this. I think I can get a structure like that. Okay, this is a regular flat. This is a regular flat. Okay, when I say expanding flat, I'm going to be showing you. All right. So But this week, what we need to see is just corrective structure here, and a drop. Okay? And a drop. From this drop, to be able to catch a nice move there. That's what we should be expecting from euro dollar. Pound dollar was a very clearer structure during the week. Right here, you have a push up, you have a three-way structure to the downside. Can you see the structure in the middle? Three-way structure to the downside. And what do you have next? You have this. Okay? But this look to be giving us a running flat for this one to proceed to the downside. So the 4-hour structure was complete right here, but unfortunately, it gave us a running flat. I was expecting it to give us an expanding flat like this. So that you have this, you have A, B, and C. Look at your B in the middle, at the middle here. Then you have A, B, and C. So once C break this stuff, it become expanding flat. So that what you have here, you have it right there to break this way. Simple. But it did not give us that expanding flat. Rather, it start dropping from this level. So what you need to do is to go to 15 minutes time frame at this point in time and be looking for market to give you impulsive move and corrective structure, not impulsive move and pullback. All right, this is an impulsive move, but did not give us corrective structure that is commensurate. This corrective structure here is not commensurate with this drop. So I don't take that kind of trade. Okay, look at it here. This is another break of structure. This is a corrective structure, but unfortunately, this expanding flat, this one has broken the level of A, and this one has broken the level of C. It's not commensurate with this drop. I don't take this kind of setup. This is another impulse. What do you see? A, 1, 2, and 3. B, and then C. Can you see that this impulse here, this corrective structure here, A, B, and C, is commensurate with this impulse. So this is the kind of setup that I take. And the question is that at what point is this structure complete? This is 9 a.m. GMT plus 1. This is the start of London session. This is GBP USD. Once structure is complete against a high volume session, all right, you consider that setup as a high probability setup. This is your stop loss, and then just project this impulse and just target maybe minus 0.27 or minus 0.62 extension of the impulse. It's as cool as that, guys. So in every impulse, the corrective structure A, B, and C is commensurate. Can you see that you have the impulse, you have the correction, is commensurate with this impulse? This is the kind of setup you can take, provided at this level, the market hit this level during a high volume session. This is 8 a.m. in the morning, the start of London session. So this is the kind of setup you should be taking. All right. So like that, and like that. Can you see after the break of structure, what do you see? The market is now consolidating. You don't take this kind of setup. This is not for you. After impulse, when you have break of structure, you are expecting corrective structure. You see that you have this corrective structure here, up, 3 waves up. That is your trade. Or you have after break of structure, you have impulse. The corrective structure now break this level here and break this top here. These are the two kind of corrective structure you should be taking after impulse. The one that you see impulse and then your corrective structure will now be something like this, running flat and all those things that will be consolidating along. Do not take. Those are low probability setup. You don't take a running flat, you don't take a contracting flat. You only take a regular flat and expanding flat. That is how to trade. Those are flats those are corrective structure that are deliberately formed after an impulsive move. But all this one now, what sense can you make of this structure? Nothing, despite the fact that you had impulse to the downside. So once you have it like that, all you need to do is to exercise patience, allow another break to the downside. So in this break to the downside, where's the corrective structure? You can't find it. This is a box consolidation. You can't find anything there, so there's no trade here. All right? But look at this one, there was trade because after the break of structure, market did not go into consolidation. It gave us a clear structure. Look at the break of structure, look at the clear structure. That is the kind of trade you should be taking. You are wasting your time when you see a break of structure in your entry time frame followed by a consolidation. That shows that the break of structure is not impulsive enough to be reliable for trading. Do you understand now? So right now, as far as I'm concerned, for pound dollar, since I've moved to the structure is complete on 4 hours time frame, all right, the structure is complete here because I was looking at this A, B, and C is an expanding flat right here. The structure is complete. So I don't have any business with H4 here, but I have business with what? M15. Okay, I have business with M15. And so for you to take M15 structure, you have to be looking for impulse and correction on 15 minutes time frame. And your correction must not consolidate. Okay, this one can still form something clean, and go up like this. This become a structure like this, okay, for a move to the downside. Can you see something like this? That's how to look at the market. Is that okay now? So we are still going to be bearish on pound dollar next week. We are still going to be bearish, and then you watch the corrective structure that follow this impulse. Now it's still consolidating. Allow it to finish its formation. Okay, can break this one and then goes up to break this top. From here, it is commensurate with this break to the downside. From here, you can look for a sell to the downside. Is that okay now? AUD USD. AUD USD, guys. AUD USD. So, in looking at AUD USD, you'll see that right here, you have a three-way structure to the upside, which I showed you last week. You have three-way structure to the upside, this three-way structure right here. So from here, from this level right here, the structure seems to have been complete. And I'll show you something very clearly. So you have three-way structure to the upside, which is commensurate with this impulsive leg. This is impulse, correction, impulse. This three-way structure here is commensurate with this. So from here, we should have a move to the downside. And if you look at it very well, there is divergence. Look at this move down. This moves up. Look at it on the RSI or MACD. Okay, on the RSI or MACD. What do you notice here? Look at up, up, higher high, lower high. That means that this market has lost steam to the upside. This one is going up, this one is coming down. It has lost steam. So any break to the downside is your impulse. And can you see? Meaning that from this level here, you can move to lower time frame and begin to look for impulse and correction. Look at it. Go to 15 minutes time frame. I'm really going detail for you today. Look at it. You can't call this one an impulse. Okay, you can't call them an impulse. This is not how a fine impulse should be. All right, this is how a fine impulse should be. Can you see? This is a break to the downside. And then to find the corrective structure, you have this way, you have it this way, anything it does this way and break to the upside to break this top. This will be a corrective structure that is commensurate. This corrective structure is commensurate with this break to the downside. From this level, you can now find a sell opportunity. From here, with a stop loss here, and then project this one to the downside. Is that okay now? So that's how to look at the market, guys. And when this breaks to the downside, what you need to do is simple. When this breaks to the downside, this is another impulse, okay, that breaks structure. And right here, it takes liquidity. There's no supply that is as valid as the one that is formed from liquidity clearance. If you clear this liquidity and break down, any corrective structure that is commensurate with this impulse is your trade to the downside. But any corrective structure that seems to be consolidating after the corrective structure is not a good one. It's a low probability setup, and you should never consider such. So what you should be expecting on AUD USD is to see corrective structure break to the downside, another corrective structure, whether regular flat or expanding flat. Is that okay now? USD JPY, I told you last week that USD JPY will drop, but it has not dropped. But do not worry, this is not how it should be proceeding to the upside. It's going to drop any moment. It's going to drop. Okay, if it doesn't drop, if you see corrective structure here like this, take it from this level to the upside. That's for USD JPY. USD card, guys, I've been tracking USD card for you for a very long time. Okay, for a very long time. Remember when USD card was here on the weekly time frame, I told you continue to look for upside to take this top. Okay, when it took this top and it didn't show sign of reversal, I told you let it take this top again so that you have an impulse here, you have a regular flat here on the weekly time frame, and from here on 4 hours, you should look for what? A sell opportunity to the downside. Okay, so let's go to 4 hours and see how the structure is unfolding for the sell opportunity. Okay, you see right here that this structure must have a divergence. Okay, must have a divergence. Can you see that at this point in time, you have the upside here, you have the upside here, you have another upside here. Can you see? It is almost gone. The momentum, the buy momentum right here is almost gone. When it was even here, it was gone. It was gone. What does it tell you? Begin to look for sell opportunity to the downside. And when you go to 15 minutes time frame, what do you see? You are looking for impulse and correction. And remember, your impulse must break structure. It must be a fine impulse. Okay? It must be a fine impulse. As far as I'm concerned, this is not a fine impulse. Even though it made a corrective structure here to the downside. Then what do you see here? Fine impulse. Okay? Then where is the corrective structure? Where is the corrective structure? A, B, and C. This corrective structure is commensurate with this impulse. You sell here. All right? Look at another one. Fine impulse. What do you see next? A, B, and C. And this corrective structure is commensurate with this impulse. This is your trade, especially when it is complete against the overlap. Okay? This is a fine impulse. All right? You are looking for corrective structure. Fine impulse. This is not a corrective structure. This is a pullback. You don't take this. This is an impulse, an impulse. You don't trade it. You don't trade an impulse, an impulse, an impulse. Do not trade it. Okay, except if this gives a little corrective structure and break to the upside without breaking this top. That is the only condition you are going to be taking it. But right here, you are having an impulse that breaks structure and another impulse. You can't trade a sell here. Okay? And this impulse down did not break this structure. So since it didn't break this structure, you have no right to consider this as a correction to sell. You have no right to do that. Because if you want to consider this as a correction for sell, what if you make something like this, which is A, B, and C, and now proceed to the upside to break this top? What will you do? All right, so this is based on rules. This broke structure, but this one did not give me corrective structure for me to sell here. Instead of corrective structure, it gave me impulse and impulse. Is that okay now? So what should you expect on USD JPY this week, guys? What should you expect? What I expect is simple. I will have to be very patient to see the corrective structure that we have here. One more upside here. So if I have one more upside here, then I have a regular flat A, B, and C. So from here, I'll be looking for what? Sell opportunity to the downside. So if you know how to read the structure very well, if you see this as A, as B, if you see this C, break this low and come here, trade this buy to the upside to take this top. So as soon as you take this top, then you will have had your A, you will have had your B, you will have had your C. So from this level, take a trade to what? To the downside. Is that okay now? Because we have seen on the weekly time frame that USD CAD is for the downside. So you have to be monitoring structure on the H4 that reflects the downside move. Is that okay now? So let's check gold. All right, gold. Gold is still consolidating on this structure. You have this, you have a pullback, you have a break of structure. So this is with A, this is with B. We need this C to break this top, guys, before you can have another move to the downside. That is basic thinking. That's how it should be. Do you understand now? You have impulse, pullback, impulse. 1, 2, and 3. 3 waves up. Okay, 3 waves down. A, B in the middle, and C. So what do you need to see to the upside? You need to see this upside to break this top. So that you have what? You have with A, you have with B, you have with C, breaking that top before you can have another move to the downside. But right now, it did not break that top and it's coming down. So what I want to see, I want to believe what it's about to do is that it will start, it will make a three-wave structure here and go back up to break this top. It must have to break this top. Okay? Once it break this top, liquidity is available for what? For this downside. So it means that you have A, B, and C. You have A, B, and C. And then you have A, B, and C. That will be 3 waves down, 3 waves up, and 3 waves up, 3 waves down, and 3 waves up. W, X, Y. So from here, you can now have a move to the downside. So what I want you to do is to be patient. This is an impulse. This is an impulse. Let there be a corrective structure here. Once it happens from here, do the sell to the downside. Once it gets to this level, take your sell and look for buy opportunity to complete this wave to take this top. Is that okay now? That is the forecast. So I have given you 2 or 3 forecasts right here. Number 1, let there be corrective structure here. Sell to the downside. Once you break this low here and you get here, look for buy opportunity to the upside. Once you break this top here, look for sell opportunity to the downside. I've given you 3 setups you should be looking forward to as far as gold is concerned. All right, and you begin to follow it. If there is any shift in market condition or there is any shift in structure, I will notify the group within the week. BTC, guys, you know, BTC, we made that forecast that on BTC, you have a clear 3-wave structure after the impulse. Okay, right here, you have the impulsive leg to the downside. You have 3-wave structure up, 3-wave structure down. We need this 3-wave structure to break this top. Since this B here, this is A, this B here has taken this level. We want C to take this level. And then what do we have? What we have is simple. We have this structure right here. We have this structure right here. All these are corrective structure in the middle. You should have this up to break this top. But market did not bother to break this top and it's coming down. But is it coming down convincingly? No. Because it's not coming down convincingly, what we expect is another move to this level. This market should move to the upside. I am not going to trade any upside on BTC right now. I'm not going to look for any upside on BTC right now. All I'm looking forward to is market come to this level, go back off to break this top. Once the 2 top is broken, BTC will move down to as low as 4550 to 45,000. All right. This sell is what is more important for me than any buy opportunity that exists right here. Is that okay? So that is BTC forecast, guys. Don't forget to visit our course, visit our website at www.NtfxTrading.com. When you go to this website, NtfxTrading.com, you go there, you see a lot of work we are putting to make the course enjoyable. You see a lot of things we have done there. You see, we visit our courses. You see the trend mastery course. It's a fantastic course that people love so much. You see trend mastery. You see advanced market forecasting techniques. You see all the courses that are involved. Even this one, you see the basic courses, because you cannot jump straight to forecasting the market without understanding the basics of trading. For a beginner who want to be an expert in market forecasting, you must first know the basics of technical analysis. All right. Once you understand the basics, you go to market forecasting techniques, introduction to wave analysis, motive waves, divergence, corrective structure, entry methodology, structure and timing, risk management, and all those stuff. Then you go to technical fundamental analysis. With these three courses under market forecasting, you are armed with enough resources to be able to trade independently. If you are also interested in trend mastery and just don't want to be forecasting the market, you don't want to place emphasis on the next move that is to come, you can also do trend mastery. All right, you view the course, see trend mastery, you see the basic course, there you see the professional level, you see a lot of price action, more than 25 videos under professional course. You see advanced technical analysis, see liquidity and price efficiency, weak demand and weak supply concept. You see all this, you will enjoy it, and the fundamental analysis. So help yourself with the resources. Why students fail? It's not because of the market. It is because they have failed to develop themselves. So develop yourself with necessary resources you need to succeed, and then smile with your results. Okay? You thank me later, guys. So have a great weekend, guys. I'll see you next week. Bye.